afternoon from the For the CME. This is Chris Robinson with your Traders Exclusive comment today. Well, it's the 23rd day of May, the Thursday before the long weekend. Friday, a lot of people are going to be done trading certainly in the morning. And what does that leave us with? And like always, I'm going to talk about mostly the grains, a little bit of livestock, and look at the opportunities that are there. We got to start with corn. The last 9 trading days, we've gone vertical. Corn rallied in the spot month 56 cents from contract lows to near contract highs. New crop corn rallied as well, 50 cents from, again, contract lows to we got within about 7 or 8 cents of the old contract high a year ago. So normally a 50-cent move in a lot of commodities wouldn't be a big deal, but it is in corn. Corn's been in about a 50 or 60 cent trading range for the past 3 years. So it's a pretty radical move, caught a lot of people off base. Certainly the managed money was massively short. As of last week, they were still short 280,000 contracts of corn. That's 1.4 billion bushels. And they have yet to really pull the ripcord on that. Now we'll get an update tomorrow, but that's going to be very key to see how long will those guys stay short. They've had $1.5 billion swing. They had a $750 million winner, and then the last 9 days, that's all evaporated. So that's really the number one driving force in the grains. It's having repercussions through wheat as well and soybean. But the number one thing is the wet weather has delayed planting. Now we're getting into the nitty-gritty of it, and if farmers don't get stuff planted by the end of June, we're really going to have an issue. So that'll mean a loss of planted acres, number one. More importantly, even on the acres that do go in, you're going to have a decreased yield due to the wet soil and also the inability of farmers to possibly get herbicides sprayed in a timely fashion. So again, that all translates to potentially a big cut in yield. And the market has repriced the possibility that we're going to go from a 2.5 billion bushel carryout right now to possibly a billion next year. So it's happened very, very quickly, 9 days. We're not through the worst of it yet. My guess is the next 2 to 3 weeks, every time we come in after a long weekend, we're going to check the planting progress numbers. So next Tuesday, the day after the long holiday, it's going to be quite an interesting market to watch. They'll release the planting progress after the close on Tuesday, and so Tuesday night next week could be pretty volatile. So all in all, it's given farmers an excellent opportunity to do some hedging. Again, we're near 2-year highs. That's certainly something that a producer needs to be taking advantage of, and I'll finish with one final thing. You can look out even way into the future. Look at December new crop corn for 2019, 2020, and 2021. And the interesting thing is they're all right at about 413, 414. So this is a critical area, a big technical level, and something to watch moving forward through the rest of the summer. Has it impacted the other grains? Wheat has had a bit of a rally. We had a nice retracement of the earlier $1.30 sell-off. That's been in sympathy. But the interesting thing is it has not really rolled over to soybeans. Soybeans are still suffering under the concerns of the China trade conflict, the trade war, whatever you want to call it. China had been our number one export market for soybeans. And as time goes on, more and more people are starting to realize that even if we were to get an agreement tomorrow, miraculously we wake up tomorrow, that some of those relationships that we took decades to develop could fall by the wayside as China looks for other ways to build its supply chain. So you've had a lot of Chinese business going down to South America, and so there may be some longer term ramifications to this Chinese trade deal when it comes to soybeans, and it's reflected in the prices. Now, soybeans are going to be delayed planting as well. First, they've got to get the corn in, then soybeans. But even all that has really not affected the prices for soybeans. They continue to be about $1 off where we started the year. And certainly it's setting up, when you put it all in a big ball of wax, that this summer could be very, very volatile for the grains. But right now, corn's in the driver's seat, and that's really about it. So look forward to next week. It could be very, very volatile, lots of opportunity. This is Chris Robinson from the For the CME, Managing Director with the Cal Guy Group, division of TJM Commodities.